And good evening, everybody. This is Michael Filigera. I'm with logicalsignals.com, and this is the Elliott wave update for the NQ for Tuesday, March the 23rd, 2021. Interesting day, not the easiest of all days, but interesting nonetheless. In terms of our count, let me go quickly to the hourly chart here, and let's take a quick review of the preferred count. The preferred count continues to place the intermediate wave B here, with the market now likely under the preferred count moving higher in a minor wave 2 advance. And within that advance, we had basically counted an A and a B and possibly a C, leaving up the possibility that the market could return again. And so today it continued to drop down up until about the start of the European sessions, and then they just kind of took the market higher. When we finally opened in the US, they then took the market to a slight new high above what we saw yesterday, about 20 points higher. Yeah, about 20 points higher, and then just proceeded to sell it for the rest of the day. So basically what it's left is a new high. So one thing under the preferred count, I could put a completion point there and call this minor wave 2. I don't particularly like that, but that could be the case. If that is the case, then what I would be anticipating is that this wave in progress right now, in fact, let me just open that up a little bit. Here we have that taking us up, and then you can see it's come down 1, 2, 3. So it's done an ABC down. So it's only 3 waves down right now. If indeed this is going to be a completion point, I would be looking for this to come down, break below the 50-day moving average, put in a new low below what we saw earlier today, and complete that hourly 5 waves down. Unless that happens and the market continues to go up, this is going to be left as 3. That's going to make it more corrective in nature, and we're going to be looking for the market to move above 13,172. There's a couple of Fibonacci's that we can add to all of this to put more structure around what we might be anticipating. Let me just make this grow a little bit more back to what we had before. I'm going to put the 4-hour chart up, and let's kind of just put that around. And I'm going to use Fibonacci extensions for the upside move. Okay, so for the downside move, we can continue to basically use what we had on before and to look for, come on. If that completed the wave 2, then we're looking for this to pick up again. I actually can, excuse me, let me change that around. Again, come on. I'm going to go back to the extensions. And I'm going to put extensions on there, to there. Okay. To there, because we're looking for downside. So this is what we would start to expect. And again, if that does complete minor wave 2, then we're dropping into minor wave 3. So again, we're looking for things to accelerate. This would be the feel and the look of what's happening around us. So if the market is going to be starting to accelerate to the downside, then we're going to be looking for it to break below 12,937, 12,866, let's call it, pretty quickly. It shouldn't take a whole lot of time. In fact, it'll be because people now want to switch positions or whatever the situation may call for. The market should begin to accelerate. Eventually, we'd be looking for it to break below that low, which is right now marked at 12,682. And start to reach probably down here before all is said and done, and we start to get somewhat of maybe a bounce higher. Now, that's not going to happen in the next 4 or within the 4 hours of tomorrow, but eventually we'd be looking for this to unfold and be more consistent. Right now, we're getting these beautiful declines, and then they just reverse it. Again, we've got 3 waves down. We're looking for it to make 5. It could make 5, put in another rally, but we're not going to be looking for it to rally with the strength that it has there, here. It should be more of just a normal bounce within an ongoing decline. It's like if they take a breather, it's tradable, but then it reverses and it continues to go down. That's what I would be looking for. Even if it goes down, puts in a new low below what we saw today, and puts in another rally. I would not be looking for it to go much further than where it is trading right now into this zone. So if it drops down here, goes to a new low, rallies again, I would not be expecting it to surpass any of these potential highs that we may be getting here. Right now it's 67.25. So, or 60, yeah, 67. So now I want to go back out to this chart, and now I'm going to go back to the alternate count. So that's what we'd be expecting. If indeed that's going to be minor 2, then we're looking for it to start to drop. And we're looking for it to pick up the pace and really begin to drop. Eventually, it could happen tomorrow, but I would not be totally expecting that. If it does, you're going to be trading what's in front of you. So therefore, you're going to be participating to the downside. And those will be those runners where you're going to leave on a contract and trade constantly with a position because it's going in the direction you're looking for and the type of wave that it is. So they can be real easy to trade. If it becomes more difficult, then it's likely not that third wave that we're looking for. But more on that is actually happens when you're trading it live. Then you're going to be able to make these decisions. You're going to be able to clue in on a lot of what's happening. Okay, so I am going to undo that, go over here and do another. This one is going to give us our upside on what we're looking for. It's not giving me my upside. Before. No, I want upside, and it's not doing it. You'll have to forgive me. I'm going to undo that and try that again. Then we're just going to go and do, well, I don't need that. Excuse me, when I change this around, undo, go over here to drawing tools and go back to this one. Probably just put it straight here. And basically you can see that again, on the upside, we would be looking for the market to begin to get above our highs that we've seen at 132, 13,253.54. So I'm now once again going to go over and go back to these. And I'm going to run, come on, come on. There you go. Run the extensions one more time for the upside. Take it. Okay, so right now we would be looking at, because again, remember this is B, and now we're looking for C wave to complete this B wave. So the alternate count is that the B wave is not done. And the alternate count would say that this is wave A of B, that is wave B of B, and now we're in wave C of B, and it would also need to begin to accelerate to the upside. So these downside strength of the moves should not happen. So how we could count this, if indeed it is going to continue to go up, this is wave 1 of C, ABC, wave 2 of C. So essentially for upside, we'd be in the same situation that the market is going down. It's in a third wave. So we're looking for a third wave to be the longest and the strongest. So essentially, it should not have a problem getting to 13,012.20. It should not have a problem getting there pretty much tomorrow and then beyond. Now, the first level that we have in that the relationship between an A wave and a C wave is that A is equal to, or C is equal to A. That would put that finishing point up here at 13,760, we're going to call it. The second relationship is that the C wave is 0.618 of the A wave, and that's going to put it right here at 13,350, we're calling, which indeed would put in a new high above what we saw and could be a good finishing point and signal more to the weakness that's waiting to start. Okay, so that's the other point that I'm kind of building in, that these Fibonacci's, and when if they're reached and the market then turns, it continues to demonstrate the weakness of the market against what this rally that they're attempting to put in. When it can't get the momentum and the oomph to get itself someplace, and then it turns around and starts to drop, it's demonstrating weakness. Even though we see these tremendous rallies intraday, overall, if we bump it up to, this is a 4-hourly chart, if we bump it up to a daily chart and further, we would see that weakness even more apparent. But right now, we're seeing it on the hourly and a little bit lower. So right now, we have both pictures. Upside, it needs to pick up the pace. And it needs to start breaking these resistance levels, and then this high, and then this, to really start to prove itself that that's what is going on in the market, and that's what our intentions are. These are what we're going for. That would be the upside. Downside is that it drops to complete 5 waves down, rallies again into the territory for wherever this ends up. Okay, if it starts to break above these other levels, downside's not going to be as probable. So we needed to go down, put in the 5, which is going to be below 12,977, needs to drop below, not a lot, but drop below. And then it's going to put in a 3-way rally again, and it should come into within this level, and then it should drop like a stone. Once that one is complete, it should drop like a stone. Maybe that does happen tomorrow, maybe it does not. But if it flounders around, it's going to take more attention away from this, the alternate account, which shows that we can move substantially higher, and put more weight on the fact that the buyers continue to fail, and that the market's likely going to turn lower. That's where I'm going to leave it. And the next update will be tomorrow.